Hey, Ivan from the EV Stock Channel here, doing a quick earnings comparison between Tesla, Ford and GM. But before we begin, thank you to all the Patreons that make these episodes possible. And as always, all content is simply my opinion only and not financial advice. Now, starting off with a comparison of revenue, in which all three companies were either at or close to their highs going back to Q1 of 2020. And looking at this chart, Ford and GM's revenue have been relatively steady over this time period, while Tesla has been growing 50% annually on average, and the trend is likely to continue in my opinion. Next, we compare net income or profit, and it wasn't that long ago, in fact, look at Q3 of 2020 and Q1 of 2021, that the media was going on about how Ford and GM were money-making machines while Tesla still couldn't make a real profit. I mean, look at these clips from last year.
A really popular face on Wall Street says Ford CEO is ready to bury Elon Musk and Tesla.
Because I believe that Volkswagen and Porsche are going to be much better performers in the market. I don't even think it'll be close. They're going to be number one in EV next year and are firm number two now. They've got great share in China where GM couldn't succeed. And so, look, to me, it's a much cheaper stock and about 6 times earnings. I'm there. Jim, we could talk about this when you're more rational.
Not succeeding in China. God, I love you, Steve. I love these moments. That's just not
like
they're
VW. VW's
Steve,
got more
GM,
share in China
I really don't care
than any other participant.
Fabulously in China.
Guys, it sounds like a garbage disposal. I can't understand what you're saying. There's like too much going on at one time.
Anyways, fast forward to 2022, where we have a changing of the guard, with Tesla being the most profitable out of these three automakers throughout Q1 and then again in Q2. This is getting interesting. And who will take the crown in Q3? Will Tesla make it 3 in a row? As the saying goes, once is luck, twice is a coincidence, and the third time is, I guess, escape velocity. Anyways, when we look at the second quarter and earnings numbers along with comments from conference calls, we know Tesla was severely impacted by the Giga Shanghai shutdowns, but they did maintain their optimism to grow deliveries by 50% from last year, which would mean 836,000 deliveries in the second half of the year, which should equate to record revenue and record profits if they can pull it off. As for Ford, they still seem to be hit hard by the chip shortage.
They are reaffirming their full-year EBIT guidance of earning between $11.5 and $12.5 billion. That is assuming that the supply of chips steadily improves. Why do I say assuming? Keep in mind, they're still dealing with a shortage. In fact, the Flat Rock plant, it's going to be down tomorrow and Friday. One example of the fact that they do not have the full supply of chips that they would like to have. Their commodity costs up about $4.4 billion this year. So those are the numbers within the numbers from Ford.
GM also seems to be struggling with chips.
Two things hurt GM in the second quarter: the chip shortage and the COVID lockdowns in China. Let's start first off with the chip shortage. Remember, just 3 weeks ago, they warned that they were not going to be delivering as many vehicles as previously expected. They did not deliver 95,000 vehicles that are built. They were built in the second quarter, but not delivered, and the company warned this would be happening because they didn't have a full complement of chips for those vehicles. Those will be delivered in the second half of this year. Its profit margin in North America, as a result, 8%. Compare that to a year ago, 10.4%. One other piece of news, the company says it has secured supplies to hit its 2025 EV production target. Remember, the company says it expects to sell 1 million EVs in North America by 2025 or in 2025. So what you're looking at is GM doing what Ford did not too long ago, just a couple of days ago, saying, we do have the supplies. We will be ready to manufacture the full complement of EVs that we are planning to manufacture.
1 million by 2025? That's going to be a tall order, as GM only sold 7,500 EVs through the first half of this year. Next up, here is cash on hand throughout the last 6 years. Again, Ford and GM relatively steady, while Tesla's cash on hand has grown 5x since 2016. And if that's not impressive enough, just keep in mind Tesla is growing cash while at the same time growing deliveries at 50% and paying down most of their long-term debt. And speaking of long-term debt, at the end of Q2, Ford is at 85 billion, GM at 78, and Tesla just under 3 billion, which is a good position for Tesla to be in as we go into a higher interest rate environment. So in the final slide, here is a credit rating from S&P for each of these companies, and interestingly, GM has the highest credit rating, an investment grade BBB rating, while both Ford and Tesla are 2 notches below with junk credit ratings, which is pretty unbelievable considering Tesla has almost no debt, 12 consecutive profitable quarters, about 18 billion in cash on hand, and a growing revenue at 50% annually. But many are speculating a credit upgrade for Tesla in the coming months, which will only serve to be an additional catalyst for Tesla's current momentum. So that wraps up this short episode comparing the financials from Tesla, Ford and GM, and stay tuned for the final 2 episodes covering Tesla's early history that will be released in the next few days. So till then, have a great day.